Hello, everyone, and welcome back to the conference. My name is Mushtaq Kapasi, Managing Director and Chief Representative for Asia Pacific for International Capital Market Association. I'm absolutely delighted to be in the Netherlands, delighted to be in Amsterdam at this beautiful venue, and thank you all for remaining for most of the day. It's actually very encouraging to see such good attendance still at 3:25 in the afternoon. Okay, so now we'll have a short fireside chat with the plants and with our nice little backdrop here. We have two guests for this session. First, here in person, we have Mr. Wei Kong from Zhong Law Firm. And Wei Kong is also the chairman of the Shanghai Green Finance Committee and one of the luminaries and leaders for many years of the China green finance industry. And online, very delighted to have Ms. Christine Kung, who is with the Hong Kong Securities and Futures Commission and heads up, well, two hats, both heads up our international work, but also sustainable finance for the SFC. So welcome, Christine. Sorry you couldn't be here with us in person, but we're delighted to have you here with us online.
Thank you. Okay. Hello.
Hello, hello. So today we'll be talking in this session about sustainable finance regulation, especially and market development in Asia. And as probably some of you know, last year we had our principals conference in Singapore, so there's quite a bit of focus on ASEAN, Southeast Asia. We've also had the pleasure of having the Japanese perspective in previous panels today. So now we'll be hearing both from the mainland China perspective, but also from the international perspective as it relates to Asia Pacific. So first of all, Christine, now in addition to your role within the Hong Kong securities regulator, you also play a very prominent role with IOSCO and the work streams there. And IOSCO, for those of you who may have missed it, is the International Association of Securities Regulators. So it's all of the different securities regulators around the world cooperating to develop sustainable finance regulations and develop the market around the world. Christine, could you tell us a bit about your work at the IOSCO level, what IOSCO is trying to achieve right now, what the priorities are, and I'd also be interested in getting your perspective on how the Asian markets are influencing IOSCO's work and how the reality on the ground in Asian securities markets, in Asian financial markets, in Asian economies is actually influencing global regulation in sustainable finance.
Right. Thank you very much, Mushtaq. Hello, everyone. I'm very happy to be here today, and thanks very much to ICMA for having me. Yes, we have been, doing a lot of work at the IOSCO level. So the Securities and Futures Commission is the vice chair of the IOSCO board level Sustainable Finance Task Force. So the task force is really active. It covers, various areas, including corporate reporting, carbon markets, transition plans, and also the green finance and innovation. So I will talk a little bit more about, corporate reporting, given that the International Sustainability Standards Board, the ISSB, has just released its inaugural jurisdictional guide for adoption or the use of ISSB standards. And this was released at the margins of the IOSCO annual meeting just last month. So this is a very important document for jurisdictions as they consider adopting, applying, or otherwise being informed by these standards. And this is also a key ask by the IOSCO when the IOSCO board endorsed the standards last year. So we do see a lot of, a number of jurisdictions are actually starting to implement the ISSB standards locally. And it's really necessary to provide them with the support that they need. So at the IOSCO level, IOSCO will continue to provide, capacity building and all that, and to help drive interoperability between the ISSB standards and also jurisdictional approaches. So we do see interoperability being extremely relevant in Asia, particularly if you look at a lot of companies, because Asia is really home to many companies with operations there, and also with supply chain entities there as well. So many Asian companies, they are required to say report against say the European standard, the ESRS. So we are very encouraged to see that the ISSB and also EFRAG, they've been working together very closely, and we do see the two sets of standards being highly interoperable with one another. This also implies that companies should be able to provide the same information in order to meet both set of standards. Apart from that, we also see that in Asia, many companies also report against the GRI. So, I would say over 80% of companies in Asia do report against the GRI. So the interoperability between ISSB and GRI is also important. So we are very glad to see that, the Sustainability Innovation Lab was set up in Singapore late last year. So we do see that this is a very, important tool for companies and stakeholders to use across Asia. And we are also pushing for that, both at the IOSCO Sustainable Task Force level, as well as at the IOSCO Asia Pacific Regional Committee level, which is now chaired by our CEO, Julia Leung. So another area that we're looking at is on data and technology, because innovation around data and technology is really crucial to consistent, comparable, and reliable disclosures. For instance, the data analytics platform can help extract and also analyze ESG data that reflects organization priorities, investment mandates, and so on. And the Asian market has a role to play to influence the development in this area. And I would also like to share with you, the development in Hong Kong. The Securities and Futures Commission has been working very closely with the relevant government bureaus, the other financial regulators, as well as the stock exchange through the Green and Sustainable Finance Cross-Agency Steering Group, which launched various initiatives jointly with the private sector. So in March, the steering group launched what we call this prototype Hong Kong Green FinTech Map together with Invest Hong Kong, Cyberport, and the other steering group members. So the prototype map is actually a directory of over 50 technology firms in Hong Kong, offering various green and sustainable finance-related solutions for companies, financial firms, and also investors to meet their business needs. And also, they can use that to look for key pieces of decision useful information. On top of that, the steering group, together with the University of Hong Kong on Science and Technology, also launched the greenhouse gas emission calculator and estimator in February this year. So the tool is free of charge and can help users, particularly SMEs, to calculate their greenhouse gas emissions based on actual activity levels. And the estimator can also help users, particularly financial institutions, estimate emission associated with the investments or loans where the data of the underlying companies is limited. So maybe I'll stop here for now. Thank you.
Okay, thank you very much, Christine. Quite a lot there, both at the IOSCO level and at the Hong Kong level. But I think the point that that I certainly have taken away and have really appreciated from ICMA's perspective is the focus from IOSCO on harmonization and on interoperability, especially in terms of corporate disclosure. And this is extremely important for Asian corporates. I think it's not just selfish on the part of regulators, but really from the corporate perspective, many of them rely on international funding, and many of them are involved in international supply chains, and also have to report up the supply chains to other companies around the world, right? So I think there's absolutely a necessity to minimize the burden on those when it comes to additional reporting. And also very interesting, we'll get back to your point about fintech if we have time as well in Hong Kong. Okay, Wei Kong, over to you now. China mainland. So I think many of you in the room will be very familiar with the numbers, but it still strikes me that China is, the mainland China in terms of jurisdiction, if you take cumulative green bond, self-reported green bond issuance, China is actually the second largest jurisdiction for that over the history of green bond market. So absolutely cannot be ignored. And just one little anecdote, if you don't mind my sharing, is I remember in the early days, we've all been going back in time for the green bond history. In early days, I remember when the voluntary market standards or voluntary market principles came out, I think the market majority view was that governments should not be involved, was that any regulation or government intervention or official sector kind of stepping on the toes of the green finance market would be counterproductive. And China was really the first official sector to start getting involved in the green finance market with some nervousness. But in the end, it turned out that that was actually a fillip for the green bond market. It was actually very helpful for facilitating and enabling the market participants to grow the market over time in the early days of the green bond market. So this was an interesting lesson learned. Now, Wei Kong, perhaps you can fill us in on the latest now. There's been a lot of movement over the last couple of years in the regulation and the oversight of the market. So maybe you can offer some highlights for us.
Okay, thank you. Thanks for all to join this fireside with such a hot topic. Even though mainland China is far from here, but still it's play more and more important role in sustainable finance. Based on Mushtaq's comments, I think at the beginning regarding to the green bond issuance, it started from 2016. The 7 ministries issued a guideline for the establishment of green finance system. This is a basic legislative work for green finance development. And based upon this document, the China start issue the green bond. So 2016 becomes China's green bond hero year. So from zero to hero, it started from this year. And regarding to the latest developments, I would like to quote 3 major, we call milestone-like new legislative work in recent 3 months in 2024. Following these 3 new legislative work, you will feel the sense how China moves forward in sustainable finance, in transition finance, in green finance. Not only about the bond issue, green bond issue, but also other equity investment and others. The first very important new rule we called new guideline. As I mentioned, in 2016, we issued a guideline for establishment of green finance system. And in this year, it means 8 years later, we have the guideline by the 7 ministries as well regarding to enhance the development of green finance support, the green transition, and low carbon investment. So after 8 years, it's a big step move forward. In this, following this big legislative work, there are 2 very, phenomenon disclosure requests published. one by 3 stock exchanges, by Shanghai Stock Exchange, by Shenzhen Stock Exchange, and Beijing Stock Exchange, regarding the sustainability report. And the other one is issued by Ministry of Finance regarding the sustainability information disclosure of standard criteria. So these two I will introduce later, but the first we call new guideline will be regarded as the major milestone legislative work which will influence the later development of green, sustainable, and low-carbon finance in the next 5 to 10 years in China. It will have big impact. So for this instance, it divided a couple of aspects. Firstly is to disclose request. They have different levels of disclose. Firstly, encourage financial institutions to disclose environmental information. Secondly, they encourage the financial institutions and bond issuers to disclose environmental information. Based on these two, they further will request the financial institutions and the listed companies to disclose sustainability information. And upon this, as I mentioned, immediately afterwards, the 3 stock exchange issued the guideline for self-regulation regarding to their listed companies' sustainability information disclosure. And based on the information disclosure, they will encourage the credit rating system to include or incorporate ESG model and method into their appraisal formula to encourage the credit rating system incorporate more sustainable factors. Based on this, they will establish, we call it data connection, to have more data disclosed and be shared by all of the entities and the public interest concerns. So this will be 3 front stage for this scenario. The later 2 stage is based on the disclosing, based on the rating, they will encourage the lending to the transformation industries, including but not limited, like heavy polluted industry, transportation, etc.
So these are actually focused on the transition
yes.
sectors.
Yes, yeah. And they also encourage all the eligible investors to establish kind of decarbonized fund and the transformation fund to support the transformation issues, including the company's sustainable development. The third category is enhance the international cooperation. So from these 3 big sectors, they include all of the development aspects. There are many more details I won't discuss here, so I hand over to you.
No, thank you very much. That's a great summary. And I also just wanted to maybe step one tiny step back to a couple of years ago and just highlight that that China actually made some pretty significant strides in developing its China Green Bond principles, which are based on the Green Bond principles that we all know and love. And that was actually quite significant and not without controversy onshore in China, especially with the use of proceeds concept. There was some debate about whether China could adopt a 100% use of proceeds concept, and in the end they did. So I think that actually is evidence of the willingness of many authorities in China to actually try to be as consistent as possible with international standards. I think the other point that I would highlight is that perhaps unlike or like other jurisdictions, China has several regulators of the financial market and many different actors involved in overseeing the sustainable finance market in certain ways. And it's quite significant that they were able to harmonize the catalog of green finance onshore over time after some fragmentation. So these are steps in the right direction. Of course, China is a very different jurisdiction, very different economy, but there have been some very interesting steps. Yeah, go ahead.
Yes. I think in addition to this, especially regarding to the proceed, how to transit the old industry to new industry, low carbon industry.
Right.
The NDRC, together with other ministries, issued a new catalog for the projects which concerned as transitional technology and industry.
And I'm sorry, I don't remember the exact acronym, but NDRC is the agency responsible for really corporate development and development of the economy. Right?
Exactly. And before that, in 2021, CSRC issued, and the PBOC issued the guideline for green bond support, the project's catalog. So these two now is working in the transitional catalog and the green bond catalog.
Yeah, so CSRC is the securities regulator, PBOC is the central bank.
Exactly.
Okay, thank you. So let me take it back to Christine. Hi, Christine. So we're a little bit behind schedule for our fireside chat, but I do want to give you a chance to address a couple of very important themes for today's conference, especially, and they're related. One is transition finance, and the other is greenwashing. I know that greenwashing has been a material concern for SFC, just as it has been with other securities regulators and at the international IOSCO level. And of course, transition finance is extremely important, well, of course, globally, but especially important to Asia, and Hong Kong has a very key role to play as a finance hub for many of the countries where transition is especially important. So perhaps if you can comment, again, both at an IOSCO level and at a Hong Kong level on your efforts to promote transition finance or your philosophy towards transition finance, and also some of the measures that you're taking and what you feel SFC's appropriate role is in combating greenwashing.
Right. Thank you, Mushtaq. So very quickly, maybe I'll address greenwashing first. So as security regulator, our mandate basically is about investor protection and also to, maintain a fair and orderly market. So we aim to ensure that, investors are given, accurate, reliable and comparable information. So, mitigating the risk of greenwashing is really, our priority. And because greenwashing can occur throughout the investment chain, so, when we make policies, we have to look at, the overall ecosystem. We work very closely with our regulatory peers, as well as with the industry, to come up with the best practices around ESG data and services, and ESG products as well. So first of all, on the asset manager front, following an industry-wide survey and public consultation, we revised fund management code of conduct, which became and our Commission's, expectations basically align with IOSCO's recommendations put out in 2021. So asset managers now are, expected to consider climate-related financial risks in their investment and also in their risk management processes, and are required to make disclosure in accordance with the TCFD recommendations. So large managers are expected to do a little bit more, which is to identify the scopes 1 and 2 emissions of funds underlying their investments, and also large fund managers, meaning that those with AUM of $8 billion or above, are expected to also assess and consider the usefulness and also the relevance of scenario analysis in evaluating the resilience of their investment strategies to climate-related risks under the different pathways. So we are monitoring the implementation by the asset managers of these new requirements during our inspection processes. So apart from that, the SFC it also put out disclosure requirements for ESG funds and 19 and enhance them in 2021 to include periodic assessment and also periodic reporting. Basically, the requirements is two objectives. One is to improve transparency and comparability exposure and also to reduce the risk of greenwashing. And we also expect funds to be true to their label. The set of disclosure aims to assist investors to understand the fund's investment focus, characteristics, and risks associated with them. And then the third area that we look at is in relation to ESG ratings and data products. So in November last year, we announced and sponsorship of the development of the voluntary code of conduct for ESG rating data providers. So this is done through an industry-led working group. With thanks to ICMA for acting as the secretariat for this work. So the initiative actually came after a fact-finding exercise that we conducted, and also after the industry outreach. And we found that asset managers, they do have concerns about the data quality, transparency, as well as the management of conflict of interest and all that. So just last month, the working group launched a public consultation of the draft Hong Kong Code of Conduct, which is based on IOSCO's recommendations. So congratulations to ICMA for such good work done. And we really appreciate that. So hopefully, with the voluntary code of conduct, help strengthen the transparency and also the reliability of history information used by the licensed corporations.
All right.
Yeah, thank you.
Yes, thank you so much, Christine. And I'm almost very sorry our time is actually up. That's gone by super fast. But thank you again for mentioning the ESG data and ratings providers code of conduct that is consistent with IOSCO principles. And we're very honored from ICMA's perspective to be a part of that and for the support of SFC. So I'm very sorry, Wei Kong, we don't have time for further questions, but thank you very much for your insights into the Chinese market. I hope that if any of you are curious about the Chinese markets, please feel free to approach me or Wei Kong during the breaks or at the reception afterwards. And we really appreciate your attention. Look forward to keeping in touch and continuing the good work. Thank you very much, Christine.